Hi, I'm Sam Meredith. Today, in light of Romania's central bank interest rate announcement, we're getting the latest insight concerning their economy from the owner of Florin Citu Advisory, Florin Citu. So first of all, the National Institute of Statistics have forecast that all major activity fields in Romania will increase over the coming months. The retail and manufacturing industries were expected to show the strongest growth. However, do you share this optimism, and how sustainable is this projected growth?
Well, it's true that for the last 2 quarters we had surprises on economic growth on the upside, but most of those came from consumption, which is fueled by higher minimum wages and wages in the public sector. In fact, actually, if we look at industrial production and retail sales in 2015, we see that the pace of those have been decreasing, and also exports. So some of the story that you told me, rings true, but there are some other aspects, like industrial production, where I'm not as comfortable with seeing, forecast improving in the future. Also, if we look at investment, it's coming after 2 years of negative contribution to GDP numbers. Nothing has changed yet. We haven't seen in the first quarter that much of a change in investment yet. It's mostly construction and consumption.
Greece became the first advanced country to fail to repay a loan to the IMF today and is now formally in arrears. Ahead of the referendum on Sunday, just how exposed is the Romanian economy to a potential Grexit?
Well, the main channel is obviously through the banking sector. In Romania, 12.7% of the banking sector is owned by the Greek shareholders. So that's the main weakness and the weakest link. However, I think that the Romanian Central Bank has taken some measures to at least minimize any damage that would be coming through this channel. So I don't expect major earthquakes coming from this immediately. However, if the situation in Greece gets tougher and tougher, then yes, obviously some of the wave will be felt by the Romanian economy via less foreign direct investment and things like that. But because Romania is a country that it's still it's the poorest country in the EU. They're still struggling with this fiscal story. So public debt has increased from 13% in 2009 to 40% of GDP. So it resembles some of the recklessness of the Greek politicians. You can find some of this behavior in Romania.
Lastly, Romania's central bank have held interest rates at a record low of 1.75%, with the Greek crisis said to have narrowed the easing space offered by low inflation. What do you make of this decision by the central bank, and can we expect a change in the near future?
Right. So my main scenario is obviously that they will continue to lower interest rates as unemployment is going up again. It's around 7.2%, and inflation has remained for a couple of years below target. So that was my main scenario. But however, I had this backup scenario that due to the crisis in Greece, the Romanian Central Bank will hold on the easing cycle. This is typical of the Romanian Central Bank, as usually, unlike other central banks, whenever there's a crisis, the Romanian Central Bank goes, instead of providing liquidity to the system or easing the monetary policy, it actually tightens the monetary policy because it puts more weight on the currency than on the inflation. So it's a weird inflation targeting regime whereby the exchange rate is more important than inflation. So it was kind of expected in the light of what's happening in Greece, but it is a weird decision if you look at what's the main objective of the central bank, which is inflation targeting.
Thank you, Florin. Be sure to check back with Jugoscopy for more updates throughout the week. Goodbye for now.